We've just been talking about the sell-off that we saw yesterday. Obviously, it did impact SAP, but it certainly impacted names like Nvidia significantly more. What does day two look like to you? What happens today? Is it a buy the dip moment, or is this the start of something more significant?
I don't think it's a buy the dip moment, but I do think it's a consolidation or a stabilization moment while we kind of reassess. I think that the developments over the weekend are a really, really long-term turning point, and that's because we were ripe for such a turning point. We traded the previous narrative of kind of US exceptional privilege in terms of its stocks valuations for so many years. There are such stretched valuations that all it needed was a catalyst to change that. Now we've had the right catalyst come through, and that means I think that this is a really long-term turning point. However, in the very short term, we have 4 of the big US mega cap names reporting earnings this week. And these are still very, very solid companies making very good money. This is not about suddenly becoming super bearish on US tech sector. It's talking about the fact that the US tech sector has a very large valuation premium that's going to come out of the market while the rest of the world can catch up. Because what happened yesterday wasn't just a negative for US tech at the margin. It was also a positive for US productivity, a positive for US global growth. And it's value stocks around the rest of the world. It's stocks that were previously seen not getting full access to the US AI tech miracle, either because of sanctions or because of cost. It is those stocks that will now benefit. Emerging markets, value stocks, the rest of the world, even US stocks outside the tech sector that can do well.
Mark, what do you think of the latest commentary around tariffs from President Trump and the market's response, or where we're seeing it, where we're not? I mean, are we going to enter a period of kind of diminishing returns or less reaction function to what he says day in, day out? And the market may be getting to a point where it wants to see actual policy before it reacts too much?
I don't think we want to see the tariff policy, but you're right. There's diminishing marginal kind of reaction to these threats. And at some point, we need the bite to come through to follow up the bark that we're getting, the regular bark on tariffs. And people do believe it will come through at some point. I am really struggling with the tariff story. It is very clear that, tariffs announcement, the knee-jerk reaction is dollar positive. And that makes sense at the immediate basis. But all this uncertainty around the US tariff policy is ultimately a net negative for US companies. It means that US companies cannot plan reliably on their supply chains, and it means companies around the rest of the world, if they have a viable alternative to the US, they'd prefer to choose it. They prefer to choose where they can get certainty to make long-term business planning. So this is another cost to US business which the new administration is adding, and it coming at this vulnerable time of stretched valuations, and now when they're being threatened on the kind of AI hegemony. So I think that tariffs, any kind of sudden tariffs that we're likely to get at some point, will be a dollar positive. But it's into that spike that I think you probably see the end of dollar strength and the start of subsequent dollar weakness after that.